Good morning, everybody, and welcome to today's episode of Market Check, brought to you by Too Late BB. There is no second best live YouTube stream to talk about the markets. Welcome back, guys. Happy Wednesday. Obviously, it's been a day or two since we've seen you guys, but we do know some very important decision making on the horizon, right? We've got FOMC later today. Jerome Powell, are we going to hear anything new? Are we just going to hear, really just kind of like the standard operating procedure for most of these meetings? I don't know. We're going to talk about it, though, as well as obviously what that could potentially do to coin pricing, to stock pricing, and everything else in between. But I'm Snorlax. You guys also know me as Tommy. I'm joined by Max and Chef Jackus. I think we'll be joined by Tucker as well later on today's stream. But before we can break down what we're seeing thus far today, because I'm seeing some mixed things across the board with crypto, right? ETH is green, Bitcoin's red. Hype is green after being red yesterday on a green day. Equities are green while Bitcoin is red. I hate that I have to say that every day, but hey, that's kind of where we're at right now. Before I can talk about this more in depth, though, I'm gonna need you guys to smash that like button. Let's run it up. I've been watching the like button throughout the show over the last week or so, and I regret to inform you guys that we are not doing a great job of hitting the like button. Let's not have to look at soybeans today, although maybe some of you guys want that. The sadistic love for the soybean chart. Regardless, guys, we're gonna have a good show for you all today. Let's talk about the markets, right? Let's be serious for a second. We do have FOMC today. We are expected to get a 25 basis point rate cut. For the most part, Powell and the Fed have not really deviated from expectations too much for the last year, I would say. So barring something extreme, it seems like we're going to get 25 basis point cut. It's probably more important, though, of course, what that dot plot says, what Powell has to say during the press conference. I guess we will just have to see. I don't really have any opinion on it. Maybe you guys do. I want to say that we're starting to bake in fewer rate cuts for next year. So maybe that's a topic of conversation at the meeting today. But otherwise, asset pricing, responding, like I said, kind of mixed across the board. It's not too much to discern. Was the market already pricing in the rate cut leading up to this? Will it explode higher afterwards, right? These are questions that I think we'll be able to hopefully answer by the end of this week, right? Given how, I would say, mostly how equities react, but maybe meme coins give us a bit of a precursor as well. After all, I want to say for the last year, whenever we've gotten rate cuts, meme coins and altcoins typically tend to do very well. I think this is kind of reflected by the fact that you're seeing the IWM hit all-time highs this week. Obviously, a lot of these meme coins are not close to their all-time high, but hey, when we're talking about getting up off the mat, this could be the catalyst to do it. So yeah, we'll have to talk about it. Equities are pretty much flat, though. There's not really too much to discern. I am intrigued by the fact that ETH continues to outperform Bitcoin off this low, and I do think that's fairly notable. Thematically, not as much on a lower time frame, but it could be lower time frame. Look, if the bottom is in for crypto, and I don't know that it is, I kind of have a pretty specific thing that I want to see in order to be able to say that. But if the bottom is in, I think you're likely to see ETH outperform Bitcoin from here. And I think if it's not in, if ETH Bitcoin is doing a fake pump right now, I do think when it eventually sets that macro high or low, that you will see ETH outperform from there. So this is a great question, man. This is a great question. Can Tommy ever shut the fuck up? Well, I'm about to pass the mic to my teammates right now, guys.
Let him cook.
How are we doing, guys? What are we?
Dude, it's too early for that kind of disrespect, man. It's way too early for that kind of disrespect, man. I don't know.
Come in with the heat, man. What can you say? Dude, good morning. What? Good morning.
Dude, that's some crazy disrespect to start the show, man. What if we just said fuck it and just canceled the stream because you were so out of pocket with that? How would you feel then, man? You want Tommy to shut the fuck up? Okay, you get what you get what you wish for. Careful what you want. Careful what you ask for. We might really shut him up and just nuke the whole stream, but good morning, I guess. Good morning to everybody except Adams Korupska 2184. Good morning to everyone except him, man. Good morning.
Now, good morning to him too.
No, well,
Maybe he just needs another coffee, man.
not
Or
good
a
morning.
coffee.
I'll say morning. Not good morning to him, just morning. All right. Morning, Adam. I am viewing the market. Well, for one, I think we just lead with this. I don't think there's any value in like having that strong of a bias pre FOMC. I'm seeing a lot of chop, contradiction, a lot of like really firmly announced, conviction bets on the direction post FOMC. I don't really think, I don't think you're going to see too much resolution before FOMC. We're probably just going to get a bunch of chop and bullshit before, which is, again, kind of what always happens. But yeah, I guess I'm seeing some things that I'm a little concerned about. And I'm also seeing a few things that, are maybe more indicative of like bottoms being put in on crypto. But I think a lot of it actually comes down to what equities do. And I can explain to you guys, in detail why that is. I just went over it in detail with our community like 30 minutes ago in our Discord call. There's a lot of very aggressive longing that's occurring on all the major, U.S. indexes, NASDAQ, S&P, Russell, very aggressive longing occurring kind of at the local extreme here. And I'll show you guys what that profile looks like in just a moment, which makes me a little uncomfortable because if we don't see follow through, then I think you really are going to see, you're going to see equity bulls really get tested here. If we don't see follow through, like you really want to see the S&P pushing 7K here by like next week or this month. Otherwise, you're going to see an unwind. And that just has to do with the net positioning, which again is not my opinion. I will show you the data.
Oh, he's gonna data. That's so interesting.
Like Powell, I remain data dependent. Okay. Just like Powell. Maybe I should have worn a tie today. There's just a lot of aggressive positioning in equities. Very much so, like, if things don't go in their direction, we don't see the S&P pushing 7K soon, you're going to see a big shakeout. And then we will look back on it and go, yeah, crypto was, once again leading an equities pullback like it's been known to do. Similarly, if they stick the landing and these aggressive longs, know something, right? Everyone likes to say they know something, and sometimes they do. And we see a breakout here above the current local range that we've been in for, a couple months, then we're probably going to melt up, right? But this is where I would advocate for most people, everybody, it's okay to hold positions, right? Especially if you're playing higher time frames. But I don't think there's any value in, aggressively positioning right here. Like we are at a very kind of awkward place for US indexes, right? From a positioning standpoint, which again, I will show you the data. It's not my opinion. I'll show you the actual positioning skew. And I think if equities stick the landing here in a breakout, then you really can see crypto make an insane recovery from here. But on the flip side of that, if equities take a dive here, we have months and months of pain and bullshit and probably just like another 3 or 4 months of accumulation for crypto before we see anything, right? So yeah, we'll talk about all that, but happy FOMC to those that celebrate, right?
Celebrate. You don't celebrate, Max?
Maybe I'll give myself like a little chocolate for lunch or something. We'll celebrate.
I'll celebrate by watching the UCL.
Yes. Amen. Although I'm much less excited for today's match than I have been in a while. I will say that. Madrid missing half their team, so we'll see.
They can always surprise in the game.
That's
during
true.
UCL. Always, like it's a blank sheet. You never know. And let me tell you, I used to be excited about FOMCs, but I couldn't care less pretty much about this one. I'll be honest. I don't think we will get any surprise, pretty much. I think Powell might say some interesting words regarding the next year projections. That's true. But also, he's probably going to be data dependent and say that they'll go meeting by meeting. I think when FOMCs will get interesting again is when Trump appoints his new chairman, which is coming next year. That, in my opinion, is going to be interesting. What he brings, the new rhetorics, right, and so forth. But yeah, right now it's UCL, any day.
All right. So in regards to the positioning, let me back up what I was saying with being data dependent. Okay. Just basically finish the script. All of our BB community will get this very soon. This shows the actual real net positioning at each level. Buy and sell delta at each level. On any ticker, you can aggregate, multiple different sets of exchange data and things like that. This is the S&P 500 continuous futures contract, where I would argue you get the most like active speculation on price moves is going to be looking at the futures charts, because people don't mindlessly DCA every paycheck into the S&P 500 futures contract. This is where the traders hang out, right? So what we're seeing right here is if you look at the top, the most amount of longs that we've seen since the bottom, April 4th, have come in literally at the upper bound of our range high here. Okay. Like so much longing has occurred right here in this cluster. Okay. If we see the market pull back from here, all these longs are going to be underwater and we're going to see an unwind. Like it's really that simple. There is so much aggressive longs coming in here at the top. Similarly, the area since April 4th, the bottom, where the most amount of shorts came in, net shorts, came in literally at the Schmiko low and they got their faces ripped off. The market is set up in an equally vulnerable position if we don't see imminent follow through here, soon, right? If we see, 67.50, let's say, lost, these longs are going to puke. We're going to see an unwind. On the flip side, if we flip this level and see 7K, like I was talking about, these longs are going to defend this level. They're going to be comfy. We're probably going to move higher. That's when we see like a melt up. Crypto should recover, things like that. Okay. So this is the S&P. Now let's look at the NASDAQ. Let's go to like the 12-hour here. NASDAQ looks incredibly similar. Look at all these longs that came in up here. Let me hide the volume profile. Look at how many longs have come in up top here. If we stick the landing and we see a breakout, this is support. These longs are going to defend this level. We're going to see things melt higher. If we break down here, these longs are going to puke. Okay.
So, Max, you're telling me that we can go both up and down? Thank you for your advice.
Yeah, that's basically what I'm saying. Look at the Russell. Same exact profile on the Russell. Look at how many aggressive longs have come in like at the top of this range. They're positioning for a breakout. Similarly to how these goofballs down here were positioning for a breakdown. The most shorted region for this entire recovery was these bottom pukers right here. So what I'm trying to highlight is that there is so much positioning skewed to the upside for all the major US indexes. Like
Max,
they have to stick the landing here.
I have a question based on the volume profile. If the longs, maybe you can pull the SPX, but if the longs that aped in at the current highs were to get underwater, where would you look for them to start puking their positions?
Yeah, that's a good an important question. It's very clear that the level to hold is like right where we're at. You can see the amount of long delta that came in, like the most heavily longed area on the chart is literally like right here, 67, 80 on the continuous futures contract. I mean, I think at this point, if you see us down below like 6,700, I see a big unwind, and where that would go, we'd probably have to look at like the lower time frame, profile to gauge it. But, I mean, an obvious kind of like SR level would just be, somewhere in here, right? I don't want to get too ahead of myself and prospect like crazy downside, right? Because it's impossible to know, because like we'll be presented with new data on every can. If we were to move down here, we would see, new data come in, and we'd see, like, for example, we could break down here and then see some goofball just like start hammering this and puking down here, and then that could get absorbed, and that might be it, right? But we don't have that data yet, so we don't know what the magnitude of like a pullback would look like. But all I know is that if we lose like 6,700, you're likely going to see a huge positional unwind because of how aggressive, literally, like the Russell, the NASDAQ, the S&P, like all the major indexes are showing that people are positioning aggressively long for a breakout here, right? And if that doesn't happen, you could see a very, very serious, kind of unwind here. I don't know where it would go to, but I know that level is going to be towards 6,700 on the S&P. And for the NASDAQ,
Max,
what's that?
Did you just say magnitude?
Ooh, 6-7 magnitude.
Predictive programming.
And then here's the NASDAQ, right? Same thing. The NASDAQ, 25K for the continuous futures contract. It's just that it's just a really obvious, like, who the aggressor is here. And sometimes the aggressor can win, right? But when you go all the way back to, April 4th, and you look at the, net positioning of the indexes, you can see very clearly how they're positioned here, right? And I will tell you, just because people have a lot of money, and just because, they're able to like really position aggressively with billions of dollars, doesn't mean that they're necessarily any smarter than anybody else, right? They just have access to a lot of capital. So the big boys puke the same way that little guys do. And a prime example of that is, I mean, look at how many shorts came in, down here at the freaking low. You know what I mean? Like, if they were so smart, why did they puke this low? You know what I mean? So it's really, really clear that this market has left itself in a vulnerable position where if they stick the landing here, we're going to see a melt up. But on the flip side of that, if we don't see follow through here, and we see these longs continue to get absorbed and then eventually work their way underwater, it makes me nervous, right? And then we have to start entertaining the scenario of, well, crypto topped months ago. What have we seen in previous cycles? Crypto will top typically months before equities, right? So I'm not ready to play downside on equities. Like, let me be super clear. I'm just watching and waiting, but I'm just sharing the data. Like, this is just real positioning. It's just real data. And I'm telling you right now, the market generally it's okay right now, but like could be very offsides to the long side here on all the major US indexes if we lose these levels. This will not be a small correction if we lose these levels. I'm telling you that right now because there's so much longing up here. And if those positions start unwinding, I mean, you're gonna get something gross, really. There's no way that it's a small pullback if we start to lose these levels up here. There's simply too much long delta that's come in.
Let me put it in other words. Lose this level and it slides out.
Yeah, that's basically me. Yeah, I mean, that's more or less in a nutshell. That's me. But here's the important thing, Jack, is I make money either way. I'm always hedged. I sleep well.
Always hedged. The FOMC or always hedged.
Yeah, I'm always hedged, man. I make money either way, you know. If you're not making money either way and sleeping well at night, what are you even doing?
I mean, I have to just give a big thumbs up to Max for this volume profile. I think that's amazing work. And you guys should be smashing the like button for it, by the way. Him showing you live, describing that. But that's just my opinion. Do whatever you want. Perhaps, go on and insult Tommy to shut the fuck up. Up to you. But I think that this is a really nice breakdown of the price and a really good indicator actually
Thank you, Chef.
that isn't out there.
I
And
hope you
maybe
enjoy it. Everyone in our community will get access to it. Chef has it early, of course. But you should hit the like button though, for real, guys. Like you really should.
can you look at a few stocks with this as
Yeah.
well?
Yeah, which ones you want to look at?
Let's look at Oracle, because I heard that
Which one?
we've seen Oracle.
You're saying it way too Czech. I can't even understand. I'm so sorry. I don't know.
ORCL.
ORCL. Oh, Oracle. So look at these top blasters over here.
Oh my god.
See this? See what happens? See when we puke? This is what I'm talking about. You can see in real time the apes coming in, right?
Yeah.
Look at what happens. These apes, they long up here. The most longed area on the Oracle chart is right here.
Would you say, based on this chart, that they started to sell immediately right after? Like, do you see that huge red cluster after?
Yep.
Is it them like top blasting and then immediately panic selling right after?
So there was a bunch of selling that came in at this level after. So yes. I don't know who it was, obviously, but
I meant the big cluster right after. The big one, the red one.
Oh, this right here?
Oh, yeah, but in the volume profile.
Oh, here?
Yeah. Do you think that could be the top blasters selling right after?
Combination of the top blasters. This is where the most of it came in up here.
It could also be different entities that were long from like April lows selling there.
It's
while
probably
the
a combination of these guys puking and then also people shorting here. So there's fresh shorts that came in to pressure these guys. So yeah, I mean, but you can see this is what I'm talking about. This is a perfect example of like what could potentially happen with the indexes, where we are seeing this kind of outsized buying at the highs on all the major indexes, not an individual name. And look at what happens when you lose this level, you come up and retest it, and you just there's just no way to get through it. Like the amount of underwater longs up here send price straight down, right? So that's exactly what I'm talking about with the indexes, right? Like let's go back and now we'll look at the S&P, right? Or the daily time frame. You see this? This is exactly what I'm talking about. The amount of top blasting that has happened here. If we get follow through, then we're going to break out. These longs are going to print for whoever these entities are, longing billions at the top. But if we lose this level, you're going to see an Oracle type of puke because there is so much aggressive longing occurring at an extreme. Oracle's a prime example of that.
By the way, I think there's also a fundamental reason for the Oracle. If you can put that chart back on, they had, I believe, the largest, I think it was the largest single day price increase with that big gap in history of a stock market, I think, or something like that. But that was like the top blast. There was no follow through. And from what I heard, they've really overinvested the capex into the data centers and so forth, and currently are in some troubles. Obviously, do your own due diligence, but yeah.
Look at where we put in a local bottom here, right at the single print also, right? See this level, the yellow? Look where we put in a local bottom here, right on the single print too. That's another little sneaky bit that you can look at, is where you'll typically fall to would be into these single prints, the areas in which people didn't have an opportunity to really position.
It kind of looks like ETH without the without a lot of noise.
Yep. I would agree.
No, I was reading, I know that a lot of these banks hold the debt for these CapEx deals or CAPEX. I'm not quite sure how to say it, but you know, in the same way that they held a lot of these like credit default swaps back in 2008. Now, I don't think that we're going to let these banks have like another 2008 moment, for the record, but that is a risk, obviously, that we have to consider. And I remember at the local lows for Oracle, those concerns were very, very loud. So it makes sense that we bounced. Does that mean that the risks are gone? No. And at some point, you have to imagine that these risks probably will rear their ugly head. It's just a matter of are the conditions right now in place or present for something like that to occur? And Max, I like that you highlighted the positioning earlier, because I do think it's one of those things where, you know, positioning kind of begets more positioning, which is what we've seen in equities. And it's been it's reinforcing the structure that we're seeing up here, largely remaining pinned since mid-September, really, when we saw liquidity start to exit the market. Obviously, that impacted small caps and crypto more closely, but yeah, and it has not impacted equities yet. Will it impact equities? Has kind of been the question that we continue to ask ourselves, right? Are equities going to drag crypto into a melt up, or are we just loading that last leg down in crypto, where equities basically do the whole thing all at once, which has happened multiple times over the last 18 months?
So let me actually show you too, where let's expand on this idea of the long delta over positioning, over aggression to the long side. If we were to lose this level, maybe we do something like this, maybe, you know, but ultimately, if we lost this level, right, and we move down, remember this chart in your mind here. Let's move over to Bitcoin and let me show you guys my concern with crypto specifically. Okay, so I'm going to move this profile back to, actually, what we'll do is we'll just look at a 200-day, 2-day look back. Look at what we have right here for Bitcoin. This is the concerning part. Do you see the amount of longs that are coming in right here on Bitcoin? Right at this level. A lot of people trying to long Bitcoin right here. Okay. The most longed region on the chart going back to basically November when Trump won the election, you know, so more or less like a year. Look at the single print that's down below the April low right here. You see this level? We just looked at the Oracle chart, right? Price likes to navigate and buoy back towards these inefficiencies. And I can look at this very easily and tell you, okay, this is most likely a high time frame range high, range low, mid range. The region in which, going back a year, where the most longs have come into the crypto market is basically between, let's just say, 93 and 89.5. Okay. There's a huge single print on this, you know, high time frame year-long range profile right below the April low. If the NASDAQ and the S&P puke from here because of all of the long delta that's come in, way too aggressive, right? This is almost like this is like the most free TP area down here. You're going to get some sort of response down here. You won't probably slice through it. But this, again, just highlights like so clearly how the market is positioned, where people are overexposed. There's a lot of long exposure that's coming in and banking on a recovery between, you know, 93 and, you know, 89, let's say. And if we don't, like, you're most likely coming down for that symmetrical deviation of this range low, filling these single prints. And then we can look to play this like a range, potentially. We'll see what it looks like down there. But you can see very clearly, like, how this market is positioned. And here, actually, let me even add in, I'll add in more exchange data here. Yeah, even adding in all the other major, it's basically the same thing. But this single print down here is concerning to me. But what's even more concerning is how many longs are coming in right here. Now, on the flip side of that, there were a lot of shorts that have come into, Bitcoin basically under like 96. If we do happen to buoy above 96, you're most likely going to come retest like, 101 to 103, right? So, that is on the table, right? But I'm just pointing out, like, if you kind of use the Jackus intermarket analysis and you combine it with this positioning data that we're able to see now, you can see that equities need to follow through here. Bitcoin and crypto are already in the gulag, right? Leading equities potentially. If equities pull back here, you're going to see Bitcoin with like a low 7 to high 6 handle. Like if equities don't follow through here. That's what I'm trying to highlight. And also let's then look at ETH. ETH will probably paint a very, very similar picture here. And this is actually too far back. So let's go back to the anchored date from the bottom. Look at that single print on ETH. It's showing the exact same levels as Bitcoin. So if equities pull back, hypothetically, right? Look at this huge gap down here, right? It's such an obvious region where like you need to see equities follow through here. If equities follow through here, we're going to have some fun. But if not, there is so much like there's so many people off sides on equities that if we did see, a month-long, 2-month-long, whatever pullback, these high time frame levels on crypto perfectly align with, one more big push down across the board. But again, if I don't know what's going to happen, like if equities stick the landing, then let's have some fun, right? But it's just I am seeing some very aggressive longs on US indexes, not individuals, that are telling me there's no wiggle room here. There's no like they gotta send it, like they gotta send everything. Otherwise, I'll see you, into that that single print down there. It is what it is. But I don't know what's going to happen. Like I'm waiting to see, I've got some positions I'm holding, but like you're not going to see me like deploying my, my cash stack right here. This is an awkward spot, like so awkward. I'd rather wait, see if they can stick the landing on the US indexes. We'll probably have a resolution within the next week. If they don't stick it, we're going to short the crap out of this market and it's going to be really fun. And if they do stick the landing, then my existing spot bags in crypto are going to print and I'll continue to redeploy cash, right? Never saw Max this cautious bearish. Brother, I've been go back and watch my November 3rd 10-minute Max video explaining in detail what I thought Bitcoin was going to do and also sharing my options trade that printed a 6x on November 3rd. I've been bearish for a while, man, or at least cautious, playing downside. I'm not aggressively playing it, but like I'm pretty cashed up and like I've been playing downside, looking for opportunity. I hate being a bear though. Like I don't enjoy it. It's just like I mean, a great way to play downside is literally just hold cash. Like you don't have to be shorting even. Like if you just hold some cash, wait for a good price to come, and then you shove that cash, like you like holding cash is basically like a short, like you don't have to be like hammering the ask, you can just stable up a little bit. Are those aggressive longs in the room with you right now? They are actually, they very much so. I mean, I could show you again. They very much so are in the room with us. It doesn't mean they won't win. They could, but
put the call ratios at the lowest level that it's been in pretty long time. For the record, backs this up.
The aggressive longs are very much so in the room with us. If you look at this this profile of the Nasdaq, I don't know how you could tell me that they're not in the room with us. Like they're very much so in the room with us. I hope they win because I want my crypto bags to pump. But I'm just they are in the room with us. They're right here if you look at it. So
just the data.
sidelined shaming is been a pretty like consistently funny aspect about the current market. It's like, oh, sidelined, and then the market's like lower a week later, pretty much without fail. The main reason I feel like you can wait to deploy capital in crypto, especially if you really want like exposure to equities, then I think something like financials are a good bet, given that we're going to be cutting rates. Financials, and then I like deep out of the money calls, just because if we are breaking higher from here, the structure is basically parabolic. You're going to continue to go parabolic in like a melt up fashion. But with crypto, especially, the reason I think you can wait to deploy cash is because the market doesn't know what to bid. Not only is there not really a ton of confidence that, okay, is the bottom in? Is it not in? It really doesn't matter. Most of us aren't really trading spot Bitcoin, right? Or levered Bitcoin. I will sometimes, but when we're talking about like asset allocation in crypto, what do you pick? What do you pick? How do you even know what the market wants to pick, unless you are, I think, deploying capital after the market's already chosen winners, or guessing, man. You're really kind of just guessing. Fartcoin's got a great bid off the low. Other than that, the pumps have been very much pump and then retrace. We've talked about this, right? Things like Trump, ICP, Uniswap, Filecoin, all pumped a few weeks ago. They've all completely retraced those pumps. So there are too many altcoins, man. I'm going to have to say it again. And because of that, I think you are afforded plenty of patience if you are heavily in cash at this point, that if crypto is going to move up from here, you're going to be given plenty of signal from something like Bitcoin in order to deploy. So it's like, oh, sidelined? Sure, man. I'll buy bags like 20, 30, 40% higher after they've already drawn down like 50% and over like a 3 or 4 month period. Sure. That's what I see. But here's another thing that I think is worth considering if you are like looking at this as a potential bottom. Your leading altcoins do not look good. Zcash and Hyperliquid. I'm going to single out those two. They look very, very weak here. Zcash, I think you could argue, looks a little bit better than Hyperliquid, but Hyperliquid structure specifically, our leading altcoin, was red 4 or 5% yesterday on a day where the market was green. ETH was up 6% and Hyperliquid was down 4 to 5%. That's a pretty notable divergence, guys. And that hype structure, man, you could not paint a more textbook distributive top if you tried than what Hyperliquid is putting in right now. I think we said this on Monday. Sure, it could squeeze up again, and it's doing that right now today. But this has clearly been in a downtrend since well before October. Or was it October that it topped? I'm not quite sure with Hyperliquid. Topped mid-September. So it's been a downtrend. It's not really much telling us that Hyperliquid is going to aggressively reverse out of here, given that you have large holders that are about to get liquidated on chain. Man, like these are the sort of things, I know it seems kind of like irrelevant to point at Hyperliquid and Zcash for direction on majors, but like these are the altcoins that led the market for the entire summer. They will tell you when altcoins will always tell you when majors are ready for a trend shift, man, especially to the upside.
Tommy, CZ was saying that there may be a super cycle in 2026. It was a pretty viral tweet. I was saying that the only super cycle that should be happening should be the delisting super cycle. And that would seriously help the space.
It would.
Right? And I don't think they would make that much less on the fees, right? Like exchanges are worried that if they would do a massive delist season, they would do much less on fees. And that's the reason why they keep on listing new shit. But I think if they did the massive delist, then capital could concentrate around few. People would suddenly be interested and started to trade again and mainly believe again, in my opinion. So, but yeah, who am I here to advise the Godfather, right? So maybe he knows something. He probably knows much more than I do. So,
I've said that I'm not against the bottom potentially being in for something like Bitcoin, but in order for me to buy into that, I need to see it break market structure to the upside. which would at least involve a pump above 100K and then a double bottom. Like there just needs to be more structure developed, I think, before I'm at all confident in calling a bottom. And if that happens, Jackus, I could see the 2026 super cycle, right? Because I think equities do look very bullish to the point where, all right, well, if we're not going down, we kind of have to go aggressively up. So from that standpoint, like I could see it, but I do think some things need to happen before we can start talking about that being the case. And I still view downside as being a much more likely scenario for this market, given a lot of the reasons that I stated a few minutes ago.
Indeed. And I mean, like 2026 is a long time, right? Like lots can happen between now and the end of 2026, and we can still get some decent downside here. And then 2026 can end up in some major upside. We'll see if it's a super cycle, of course. But yeah. So we'll see. But I still stand that the super cycle should happen on the delist season.
That'd be bullish.
It would be.
Yeah.
Look at the MSTR profile here. Like,
I'm almost afraid to look at the MSTR profile. I'm sure it looks horrendous.
I mean, look at look what's causing the sell-off. It's like, look at the longs that came in up here. And then also look what's happening where we're currently at right here. Like, you want to talk about fuel for another leg lower? Like, look at how many longs have come in right here. Like, exclusively right here. Like, what happens if MSTR is at, 160? What happens?
Oh. Let's find out. Can we, Max, there are two things regarding the volume profile. If you can go back on ETH, right? And you've mentioned that there is like that 0% delta on ETH at that region, and I'm not sure which. Yeah, probably like that. Yeah, exactly. And I mean that region is I love this confluence. That's a region that I've been looking for ever since, like when I said if we are to break down here, that's where I think we will go. And it made sense to me from a technical standpoint, and I love it being confirmed by the volume profile as well, which doesn't mean anything, or like it means probability is increased, but it still doesn't mean that is where the price must head, and it doesn't mean that's where the price must turn around, but probability is increased.
It's just, you look at the whole picture,
Mm-hmm.
If they can really squeeze equities here, then we'll probably be good. But if those equity longs don't follow through, like that single print level on ETH right here, again, this is just looking at the most recent positioning data from, the April bottom rally, this pullback, like the most relevant positioning. It's pretty clear that like this level, this is probably a generational shove, honestly, like if you get down into here. But yeah, I mean, it's pretty clear. It's good confluence. I remember you talking about this level down here, Jackus. I do. You posted a bunch of charts about it.
Yeah.
It'll be really interesting. See if we come down there. Really, really interesting. It's just such a polarizing level. And here, let me even we'll look at them side by side here. So like let's look at Bitcoin. I want to show the amount of confluence that is down. Here, let's look back. Like you can look at this and see like, wow, Bitcoin, let me extend it a bit here. Bitcoin and ETH have like the same, like single print level. Like if we were to get one more flush, like look at, they both have the same like single print level, right? It's kind of wild.
Can we perhaps also look at the zoomed in version on the current sort of ETH breakout, and if like people are piling into longs here, FOMOing?
Yes, we definitely can. Like ultra locally or like going back to when?
No, just locally, really, like perhaps on H1, H4 time frame.
So I would refer to this version of the script, which will show like candle by candle. This is like a, here, I'll go to 15-minute time frame. Maybe that's too low. This is Bitcoin.
Yeah, I'd like to do ETH here, really.
And then I'll turn off the aggregation. There's definitely some longing, but it's not.
No, not on M50. I mean like this whole, yeah, I mean like this whole cluster that we've seen after the yesterday's pump.
Right here. So actually what we're seeing looking at ETH is there was a lot of people trapped short. Like look at these guys down here.
Mm-hmm.
All these guys are getting squeezed right now. Like see the amount of shorts that came in right here below,
Yeah.
33.30. That's what's happening today is like these guys positioned for a full retrace and now they're getting squeezed. So it's very easy to spot like with these scripts where the trapped aggressors are. So these guys are getting their faces ripped off. We're not seeing that many like fresh aggressive longs coming in right now. Here, actually, I need to.
On Bitcoin?
No, on this very local ETH, like very, very local ETH push up right here. This
I was
is
going to say we are seeing it on Bitcoin. Funding went from negative over the last few days to positive up here.
Yeah, we can check Bitcoin, see what kind of orders are coming in here. Yeah, I mean, what it looks like to me is there was, see all this red right here? Like this to me is saying there was just a lot of people shorting Bitcoin below, 92. And we're just kind of seeing that buoy back higher, and these shorts are probably closing, or maybe new longs are coming in. But we're seeing, what we've seen over the past day or half a day is a lot more short aggression below, 92 on Bitcoin than we have seen like fresh long aggression here. It doesn't mean there aren't fresh longs, but I think what's causing this move here is just really aggressive shorts below, 92 on Bitcoin. And then on ETH, so clearly some very aggressive shorts came in. I'll move this box. You can see this cluster right here. These guys are getting their faces ripped off right now, So we are seeing some, aggressive positioning, but it actually, to me, seems a lot more like pre-FOMC shorts, going back to yesterday.
Mm-hmm.
Started shorting this and unsuccessfully, and now they're probably closing, or maybe people are putting the squeeze on them. But I actually view this ultra locally as like more, shorts were actually more aggressive pre-FOMC, and that's kind of why we're buoying higher right now. But it's FOMC. We'll likely, if we keep moving higher here too, we'll talk about this in the Discord and stuff like that. What we'll likely see is if ETH keeps squeezing here or something, we'll probably end up seeing, some big push up, and then you'll see some ridiculous long orders come in, up here after FOMC, and then they'll be underwater and get the same, reverse squeeze that we've seen. So ultra locally, that's what the data is telling me, is like these guys right here on Bitcoin, way too aggressive shorting below, 92. So much short delta came in below 92. It's the same thing. We constantly see this. Like, look at, even like when you just see like these big sell clusters on like a breakdown and then they get engulfed, you just buoy the other way, right? We can look at a little higher time frame as some examples. Like here, let me see what the 4-hour looks like. Like, look at these guys down here. This is on the 4-hour. See some huge selling here at the bottom of this candle. Gets engulfed immediately.
Max, I have a question regarding the volume profile.
Mhm.
With regards to I'm just trying to like understand if I understand properly, right? But when I look at the East currently here from this point of view, it
Mhm.
seems like there is lots of longs piling in right now
Yes.
from this from this entire region, which obviously doesn't mean that the price goes down immediately, because right, the price can continue.
Yep.
But if it started to sell off, then these longs are underwater and there could be an unwind.
Correct. Yep.
Yeah.
Correct. Very much so.
People are
cool.
only interested in longing Ethereum at these prices.
Yeah, you can see very clearly right there. There's a lot of longs ultra locally that are feeling convicted here. And here's the thing, like aggressive longing, it can work if you're going to continue on, right? Like that's how price moves higher, is people aggressively long it. But you just need to make sure that those longs stay above water, because as soon as they get underwater, that's when the unwind happens. So I can pull that up too, and we can look at here. I'll anchor it. What was the start of the week? It was we can go to like the 30-minute. Let's look at we can even look at like the bot. I need to readjust this. So we could go to like November 21st. I actually feel like maybe we could include this cluster to see the supply right here. So going back to November 10th.
After we look at ETH Max, can we look at Sol?
Absolutely.
Because I feel like the weakness that we're seeing out of Sol is signal. Sol is always signal, man. The fact that we've been building up or top side liquidity at like 145 to 150 for like 2 or 3 weeks now and still have not taken it, to me is definitely a sign of weakness when you see what ETH is doing in the meantime.
And look what's caused this whole squeeze here. When we talk about the positioning of the market, like look at that most heavily shorted level on this profile, basically just looking at like this bottom formation here. Look how many shorts came into ETH, right here, right? That's what's really fueling this thing higher, It's these apes down here. But yeah, even more locally, like from the, November 21st, we can anchor it. So November 21st.
This is also something I was saying, by the way, like over the past months, that the market, in my opinion, isn't in a bullish condition. But that doesn't mean it will go lower immediately. Like what I can imagine is that there's going to be lots of people trying to short this on every single possibility, and the market will just keep squeezing them until they, the typical, try to short. Oh fuck, it doesn't work, and then the market drops.
Yeah.
Or vice versa, right? But like.
Mm-hmm. Yeah, there's a lot of longs coming in up here, but again, if we keep pushing higher, then it's no problem. But specifically this morning, like Jackus was just highlighting, it's specifically like this level right here. If we see these guys, if we see this level get lost here, really more like, 3,300, you'll see these guys puke. It just is what it is. It's it's the same thing as like, look at the aggressive shorts that came in, down here. Look at how much short delta came in at the lows right here. Fuel for higher, right? You wanted to look at Sol, Tommy?
Yes. Because we have, I mean, you look at that structure and what screams out at you, right? Like it's all the highs that we have there that have not been run. It almost makes me think if we are taking those highs, you're going to get you're probably going to squeeze up into at least like 160, but probably higher than that realistically, based on how long we've been cooking in here. But you also have to think, all right, well, that liquidity is there, and it's the type of thing that a strong market is going to hunt, but a downtrending market is going to protect those highs. So I do think the fact that we haven't been able to sweep these highs, I mean, we've gotten like baby sweeps of like we barely took the liquidity for that consolidation. It just looks very, very weak to me. Sol is always signal. So if you see this breakout,
Tommy, look at the highs here.
Pretty
look
high.
At the most longed area from this whole range.
I don't even know how that's like Michael Saylor level execution right there.
It just goes to show how offsides this market always is in like aggressive positioning. Like, look at we're not like, it's just data, like look at the most longed area on the Sol chart going back to when this range formed, November 13th. It's literally between 143 and I guess the top, right? Like that's where the most aggressive longing has occurred. And then look at where the most aggressive shorting has occurred. At the bottom, right? It's like you just can't make this up, man. Like they want to everyone's a breakout or breakdown trader is what this data continues to show me. Is just everybody's playing for the breakout or the breakdown, and they just 9 times out of 10 just get ripped the other way every time.
Oh man, Max, look at Sol ETH. Oh no.
Oh no.
Oh no. Dude, look at Tommy, look at the longs that came in and where they came in. Look at that. Do you see that?
Have to hold this level on Sol ETH. I cannot emphasize that enough. If you don't bounce on Sol ETH here, I'm not gonna guarantee we're gonna break down right now because we are trading into the low. It could bounce here. Like, let's be clear. If you do not hold this low, it's over for Sol. It's probably over for Sol.
Can you just
at
look
least
at this
relative basis against ETH?
Look at where the Sol ETH bears position long in this range, Tommy. Like I cannot believe it. Let's look at a higher time frame view of this.
You have to hold this level. Like,
let's go back to this high. So April 21st is our anchor point.
And I do want to be clear, it's been kind of my bias that we do hold this low. But you do need to understand the context of if the low does not hold, there is no bottom for this chart.
Yeah, I mean, I just don't see how this chart really like there is no level on this chart,
Yeah.
to hold it.
Let's just look at the rally.
I'm pretty much just speculating that it's going to hold, but it looks rough. It looks rough. But I mean, here's the other thing. If the market is going to move down, ETH is, because it's pumped so much this week, could cause a bounce in Sol ETH. Right? Because you'd be retracing an outsized on ETH against the rest of the market. So I don't want to get overly bear hold on Sol ETH, but if you get a clean break of that low, like, yeah, man, I'm a perpetual Solana fudder at that point.
So let's look at this profile for some information. Do you see the most heavily shorted level on the chart is right here, and they are very much so in the money on their positions. There's no reason to long Sol over ETH unless these guys get put underwater, right? Look at that. That is not good. Not good. Because they're shorting it and they're winning right now. That's
Not
something.
good.
Wow.
And, I mean, I think it did kind of like, I don't love to see, as somebody who is maybe looking to bid Sol again in the future as like the meme coin infrastructure. It's kind of funny to say it like that, but as kind of like the meme coin infrastructure chain, it's like all of the founders are bidding a ton of Zcash. They're exiting into a privacy narrative. I don't like to see that. Like, why are the founders doing that? I don't, man, no comment. No comment.
Yeah, this is probably the right way to look at it. Yep. I mean, dude, that looks abysmal. Just looks so fried. Dude, look at that. Oh no. Oh no.
Yeah, it's not great. There is no second best L1. It's ETH. It always will be ETH. Dread it, run from it. All your L1 liquidity comes back into ETH at the end of the day. Study AVAX ETH. Study Sol ETH last cycle. Potentially again this cycle.
Study Sol BTC top longers. Look at these guys.
So what was the best e-skiller in the end?
Terrible. That shoulder on Sol looks just like it did April, May of 2020, like Sol USD, April, May of 2022.
So everything is shit compared to ETH, but ETH looks like shit. Not good.
Yes, pretty much.
You're saying this move over here, Tommy?
Shoulder, yeah.
This thing?
Yeah.
I see it. Yeah. Oh my goodness. Dude, oh my goodness. I'm at a loss for words with this chart.
I'm really surprised it held up as long as it did. I'm gonna be real.
The majority of the longs.
It almost convinced me it wasn't gonna dump.
They almost got me.
They almost got me.
Like, look at where
they
these
had us in the
goofballs
first
came in.
half, not gonna lie.
Look where these goofballs came in, man. It just is just something else. See, October 15th. Let's just look at November 11th, 2022. Yeah, this is so clear. This is where you'll look for signs of a bottom when it happens, is like, look at going all the way back to the bottom. Like, this is where people puke the Sol Bitcoin pair. And this is where they long it, right? It's becoming so clear to me, the value in the like positional data, just to see where it's really as simple as like find where the crowd is positioned and then just do the literal exact opposite.
Well, Sol, Sol, I felt like was very effective to be positioned in for a long time. And I think Sol ETH kind of shows that as well. Like, for one, the majority of the upside on the pair happens when most people are not positioned. And then when you see, I think, kind of that more like slow grinding price action, then you see the consensus, I think, become formed. And in the same way you saw this with ETH BTC in the last cycle, you got that parabolic rip. And then if you were over positioned in ETH versus other L1s for the rest of the cycle after that, you got smoked on a relative basis. So usually if you've already seen that aggressive upside on the pair, it doesn't make as much sense to be over positioned in that major. But it does mean that there are a lot of opportunities on chain because that valuation is settling on fair value and people are more likely to now speculate with those tokens. But man, it isn't. I am surprised though that we had the big ETH run earlier this summer not have any impact on chain for ETH. Maybe ETH Bitcoin needs to go higher before that happens, but
ETH BTC looks really good here, actually.
I do think like these treasury companies have been viewed almost exclusively as like just idiot bidders of the coins, but I think eventually the good TCOs they are going to end up putting their coins to work and try to gain yield from not just the token going up in value very quickly. It's going to be, all right, we bought these coins. The best way for us to generate yield on these coins is to put them in DeFi. I think you're already seeing this kind of with a hyperliquid TCO. We're going to put these coins to work on the EVM, on the chain. We're going to gain yield in DeFi, do whatever else we need to do with the coins to generate that yield. But that's the sort of mindset that you need to have to recreate 2021 level mania for these L1 tokens. So I do think that will eventually come of these treasury companies. There are a lot of people who top blasted, unfortunately. So maybe we have to wait. Maybe we have to make them puke. But eventually these guys are going to be the ones that are putting the coins back into DeFi and enabling on-chain to flourish again. So I do want to say that.
So what you're saying is that people need to believe again.
That is exactly what I'm saying. Will
Maybe.
they? They will. I mean, people.
Jackus, you had a really interesting post this morning on X about how everything in the world has been green except for Bitcoin. And that chart, the table you shared didn't even include like altcoins. It was just Bitcoin, you know?
Yeah.
But everything has been doing well except for our asset class. So
Indeed. It's
so everyone, they give you a hard time for being in crypto or, things not going well. But it's like, I mean, there was plenty of reason to be bullish for a long time. And we just happened to be like the most plagued asset class ever. So
it's just give me harder battles.
you're still alive.
That chart really showed me that obviously you can discuss fundamentals and then people tell you the fundamentals don't matter, but I think, and it's also how you interpret them, right? It's sort of like lots of macro head guys discussing. It's I think they do matter. Obviously it matters how you interpret them as well, but this year it was, in my opinion, the right thing to do, to be bullish, or like be bearish for the tariff drop, but afterward be bullish, right? And continue to be. And I think the markets across the board confirm that. And it really shows, in my opinion, bears in crypto were sort of lucky here, I would say. That's what the table showed me as well. But nonetheless, it happened, and as you said, we are in the most scammy industry. We are, at least for now.
Mm-hmm. Sucks.
Yeah. Anyway, market looks like it's just waiting for FOMC really at this point. About 1 hour and 18 minutes till the decision, and about 1 hour and 45 till Jerome decides what tie he's wearing.
don't hate the look of the VIX here, guys.
Expecting spike?
I mean, I've been calling for a bigger spike for a while. I said this on the afternoon spaces yesterday, but I was like, I've been thinking the market would crash for a while. Just because it has not happened doesn't mean it will not happen. But I do think in general, like equities are at a pretty binary place where, you, like I said earlier on the show, if you're not going down, you have to be going up aggressively. Which in some ways is still bullish volatility.
This looks like a failed breakdown attempt to me.
I think if you get like real acceptance back above 18, then you're going to get your puke. 18, 19.
Given the time in the year we are in, right? Like going into the Christmas, do you think it's going to happen during the Christmas? I'm thinking that would be through Satan rally, not Santa rally, but Satan rally. But I'm thinking that it might not happen until the beginning of the year. It's 10th of December. You have about markets closed on. Yeah, so you have about 8 trading days left, basically until Christmas. We know that during Christmas there is minimal trading activity. So I tend to think that just thinking about it now is that we probably won't see much from equities, but a New Year sell-off.
I don't really have I don't know about timing. It's I just think the VIX is going to spike if we get headline risk. Equities have been saying like, all right, if nothing ever happens, chuds win, then we're going to melt up. And if there is a major headline risk, I imagine it's going to happen in the next few weeks. I don't know if I think it can happen in January, Jackus, because I think there's more likely to be a lot more like reallocation in January if nothing has happened. Because right now I think you have a lot of fund managers, especially on the equity market side, who have done very well this year and don't really have too much of an incentive to buy a dip, to try and reposition. They want to lock in their bonuses for the year. So yeah, I mean, I kind of feel like if there's going to be a slide, it should happen before the end of the year. And if it doesn't, then I feel like equities are just going to drag crypto higher.
That's the eternal question. Are equities slugging crypto, or will equities slug crypto higher again? Was crypto a lonely event? Again, that table, we haven't shown it. Perhaps Max, you can put it on the on there. But like that's insane. It's insane that everything was green in the year except Bitcoin and crypto.
Let me find it.
Yeah, Bailey, I absolutely agree. Like we discussed this for a while too, that X is generally a negative alpha, especially with its algorithm changes as well. Like, it is what it is. But yeah, here is the table. Appreciate that. You just gotta appreciate it.
Give me harder battles. So look at that. What we're seeing here, guys, for those that don't know what they're looking at, you've got all your asset classes on the left, starting with gold, small caps, bonds, REITs, mid caps, whatever. And then here's 2025. Every single one of them is green on the year, and then Bitcoin is red. Give me harder battles, like it's all I want is harder battles.
There's not been a year like that. Like if you're gonna look at 2016, 17, right? All green, Bitcoin just green more.
2019, 2017, 2016,
And you have a red year. All right, Bitcoin's red more. We know that, right? That's why we are here for the higher volatility. But then 2025, everything green, Bitcoin red.
And that's where, people that are like,
You muted your mic.
Did that yesterday too.
Yeah. Still.
Max. Oh, geez.
They ride him.
Can you hear me?
Ride him.
Yeah.
Okay. Yeah, the thing, people will like troll about, like crypto, or like give individuals a hard time about like crypto and be like, you were bullish, look what happened. And it's like, dude, like we were supposed to go up, like we've been at like macro conditions have been conducive for better performance than we've seen. This is kind of like, this year is clearly an anomaly performance wise to the downside for crypto versus global assets. Everything. They fucked us. They fucked us is what they did.
And that's why I say that you cannot be too hard on yourself based on the outcome. That's just like sometimes shit happens. Sometimes you tend to be in the middle of a fight between CZ and hype, perhaps. Or
That definitely didn't help the market. Safe to say.
Like this, by the way, only locally, right? But that drop on Bitcoin in the beginning of 2023 or end of 2022, that FTX drop, it also happened only in crypto due to FTX blowout, due to CZ versus Sam. But like if you were to look at equities or silver or whatever,
How about even
market
ETH?
or even ETH, that's a fair point. Markets bottom in May, or like during May, June, July or so. But still, bears told you that it was in the chart. They're like, oh, for sure it was in the chart that the second largest crypto exchange in the world is going to collapse. Sure, it was in the chart.
I wouldn't say that the FTX collapse was in the chart, but I did think that we would PO3 that range at some point. I remember thinking to myself that would be what we do when we were consolidating between like 18K to 25K. But because FTX blew up, I was like, well, that's a knife that I don't want to catch anymore. The psychology of markets are pretty amazing that way. But yeah, I mean, I don't think you could have predicted they were going to literally go to zero. I do think you could have predicted a sweep below like 18K, which is what we got. But yeah, obviously the nature of what happened being unexpected probably made a lot of people with that plan not buy what ended up being a generational low.
By the way, what also happened is that lots of people that like were really bearish got even more bearish, and they failed to buy after or like accept when the market turned around. Like when you look back, right, you like flip the candle that caused just fundamentally you flipped the candle that caused the second largest crypto exchange to just collapse. You flipped the candle, and that was a signal on its own, but lots of people failed to see that.
2022, I have mixed feelings about that year in crypto. Some of it was really fun, and then some of it was just like the most heinous price action you've ever seen for a lot of it. I would say the 18K to 25K range was some of my least favorite price action to trade in crypto ever.
You caught that short though, Tommy. I remember this one, if this is what you're talking about.
No, I meant the one from 2022, but I actually didn't hate trading that price action. This price action though, I despised. I despised it, and I did not do very well trading it either.
This was tough.
Because I knew we were going to sell off. Like the whole thing, man, was just such a scam. I knew we would sell off But the way we grinded up on like the most random things, like there was a CPI print at one point that was like an 8.0, but price squeezed up dramatically. I remember that made no sense to me at the time. In hindsight, it's easy for me to understand why that was the case, but I was like, yeah, why are we having this ridiculous squeeze to new high in like one day after it looked like it was over? And then the distribution that happened towards the top of that structure was also like very, very predatory on a lower time frame. I remember Bitcoin went up to like 25K. It's really funny to say that now. Bitcoin went up to 25K. And then it made like multiple stabs at the high before it eventually broke down and sold off in just like one whoosh. And then the whole time, I mean, after you had that huge scam squeeze from 18K to 22K that literally just rugged when it was finished, then you had the most like heinous chop that I can ever remember in crypto. So
this was wild, man. This was so wild. This set of price action was the most egregious thing I've ever seen. They sweep the range high, like this wick high, right? And then Silicon Valley Bank goes down right here. And then they rip it from 19 to 30 in like a month, you know? But I mean, this was wild, man. Like textbook, everybody gets wrecked, you know?
Price kept going up, but people kept losing money.
Yeah.
I enjoyed trading that bit. Maybe not like the weeks that were kind of leading up to SVB was pretty choppy, but the puke was good. And then the rip, I actually felt pretty good about buying the dip over that weekend before price ended up ripping. The one mistake I did make was I had these like 25K calls that were so cheap and expiring like a week from whenever I bought them. Price dipped, and I was like, well, these aren't coming back. I puked them, and then it ended up being like 30K the next week. So I fumbled like 100x on those Bitcoin calls, but you know, what can you do?
Those were the times.
Wow, we've been here a long time.
We have.
Bro, the amount of like, dude, I remember where I was every place on this chart. Like it's tattooed into my brain, you know? Like it's sick, man. It's sick. It's completely sick. Like I remember like on this drop right here, this one, I was in Florida for this one, you know? I was in Florida on this one too. Came home here, went back there, you know, like I was in Florida actually, funny enough, on this drop right here. Like I remember I was in St. Paul in this one. Like, dude,
Like every big volatility moment for Bitcoin, I remember exactly where I was and what I was doing.
Dude, the fact that the chart looks like what's the craziest part about trading and like looking at an asset like Bitcoin so much. One, it kind of becomes like a timestamp for your life. You almost remember like what you were doing at that time, based on how the chart looks. But also, it's like we don't know what the chart in the future is going to look like exactly. There's ranges and volatility events that have yet to be endured by us. That like, who knows what it's going to look like? You know what I mean? But we have future SVB events. We have future ranges. We have future pumps that just are not here yet. But we'll go through another season of remembering all of our lives from future price action.
Days of our lives. The crypto.
This fucking chart haunts me, man. All of it. The Grim Reaper. Okay, that's the end of the show. Tommy, take us out.
All right, guys, we hope you enjoyed the show today. A reminder that we do market check throughout the week whenever the New York Stock Exchange is open on the days of Monday, Wednesday, Thursday, and Friday. So catch us again tomorrow We will break down whatever happens with FOMC, Jerome Powell. Maybe nothing happens, right? Chud Jack mode. Maybe everything happens. Regardless, we do these shows, like I said, throughout the week. Our typical start time is around 11:20 to 11:30 a.m. Eastern Standard Time. So catch us again tomorrow and obviously on Friday as well to wrap up your week. Also, make sure to tune in for Market Talk hosted by the legendary King Wabi. That is an X Spaces hosted through our Because Bitcoin account as well as by Wabi. So make sure to stay following and subscribe to both of those accounts so you can be notified when we go live. But we do have a uniform start time now for that show, which is around 3:30 p.m. Eastern Standard Time. But thanks for tuning in, guys. We'll see what Jerome Powell has to say later today. Or, I'll keep joking. Maybe nothing happens. Regardless, what we typically see after FOMC is that positioning does unwind. We will see what that does to the market. And obviously, we'll be here to discuss it with you all throughout the week. But thanks for tuning in. Be back again tomorrow. But until then, of course, stay safe.
Tired of outdated trading tools, confused charts, dozens of tabs, endless stress? You're not alone. Introducing BB Terminal, your all-in-one command center for crypto trading. Track your portfolio, monitor the markets, stay ahead, all in one place. From chaos to clarity, from struggle to success. BB Terminal.